Hi, everyone. This is Tim Melvin of the Tim Melvin Deep Value Report and Banking on Profits newsletter down here once again in Central Florida. Didn't have a video last week. I apologize for that. We just got a little too busy and didn't get it done last Tuesday. So my apologies for that. Now, the week before, we had some complaints about the audio quality. We switched to the headset. That made it better for a little while. Now that's not working so well. So we're checking out some microphones and some other things to make the audio quality a little bit better. Going to do some video software upgrades. Maybe we're going to get some PowerPoints and presentations in here, just so you can look at something besides this when we do these weekly presentations. But for this week, you're stuck with just me, my little Doc Ford T-shirt. And again, if you've never read the Doc Ford novel series by Randy Wayne White, you are missing out. Please try to start with the first book, and I think they just published the 18th or 19th in the series, and every one of them is a fantastic book. So don't miss those. They're a lot of fun, great reading, and you actually learn some stuff about biology, Florida history, a whole bunch, just some pretty cool stuff worth knowing. They're great books. And a lot of fun. Anyway, this week, David Rubenstein of the Carlyle Group, who's one of the investors that I pay very close attention to, simply because he's been so incredibly successful with skyrocket rates of returns over a very long period of time. He did an interview this week, and he said that he had been worried that we were going to slip back into a recession here in the United States because the economy just didn't look that great. He says now he sees some signs that we're getting a little better and that we'll stay in growth mode. But don't get too excited. He's not talking about runaway growth here. He thinks that for the foreseeable future, we average about 1.5% GDP growth. That sounds about right. That falls into my category of better but not good. We're just going to kind of muddle along. I think what we figured out here is that fiscal stimulus can save you from going over the cliff. It's certainly great for real estate and stock prices, but it doesn't really do much out there in the real economy to create jobs, and there's still some issues on that front. If you look at the jobs report last week, we created 215,000 jobs. Yay, that's much better than a negative. But when you really started to tear that report down, the cheering needed to die down a little bit. Okay, the workforce, labor force participation rate is still very high. The number of people that are long-term unemployed and nominally attached to the workforce remain pretty much unchanged and have since about the middle of last year. So there's no great jobs recovery going on out there, folks. The headline numbers look great. The internals, not really. And the jobs we're creating, I'm sorry to say, with the exception, we had a nice bump of about 34,000 jobs in construction. That is a positive. Construction jobs tend to be fairly well-paying jobs. But the rest of what we created, and this is not a knock on these professions, okay? Waiters, waitresses, bartenders, the restaurant section, the bar section of the economy, showing some growth. I don't know how that's possible since, for these last 5 years, I've been married and hardly going out at all, and certainly not out to eat and have a couple drinks at happy hour almost every night the way we did back in the single days. But it's growing without me, I'm happy to say. But you've also got a lot of healthcare jobs being created, and these are at the lower end of the scale, okay? These are the clerks, the technicians, the assistants. They're not the doctors and the nurses. In fact, you're not seeing a lot of growth in those higher end. For business and professional services, stayed about the same. So we're creating jobs. They're not great jobs. They're part-time jobs. They're lower paying jobs. We need something drastic to happen in this economy in either the tax code or, I will say it, corporate spending habits. There's an awful lot of money that has gone towards stock buybacks that could have been to much more productive job creating use in this economy. But for various regulatory sluggish economy, businesses have been reluctant to do that. They do feel the short-term pressure to get the stock price higher, so they just buy back stock. A lot of that money, I have to say, I'd rather see used in other ways that might create some better jobs. But the only thing I'm the CEO of is me and the dog, and the dog doesn't listen all that well either. So I think that'll continue. I'm going to stay in just kind of a slow, sluggish growth mode. Earnings forecast for the first quarter for the S&P 500 going to be down. They're looking for better growth in the second half of the year. Call me skeptical. These estimates always start off with the second half, being gangbusters, and they tend to not come in that way. Maybe this year will be different, but we'll certainly sit here and wait and see how it plays out. Now, the big news this week is the Panama Papers. this is a very cool story. A Panamanian law firm has had their records pretty much hacked, stolen, whatever you want to call it, but there's just terabytes and terabytes. This is an enormous file of financial transactions data of people attempting to move their assets offshore, maybe evade a few taxes, maybe not disclose where the money came from in the first place. But there's some big names caught up in this. There's world leaders from Argentina, Russia. The Ukrainian president was apparently moving money out of the Ukraine as Russian troops came over the border. So I am guessing maybe he had an exit plan. But there's leading figures from from Iceland. The prime minister there resigned today when his wife's name showed up on the list of people creating offshore trusts in Panama over the last several years. China, Syria, the king of Saudi Arabia is involved. Now, some of this is going to turn out to be fairly legitimate, if not entirely wonderful activity. But a lot of it's starting to look like there's some nefarious and maybe not so ethical and wonderful reasons for moving that money offshore. There's going to be more that comes out of it. The files were just released, and as I said, there's a ton of data, but there's actors, there's athletes, financial industry figures, just a lot of wheeling and dealing going out there, moving money through Panama. That's usually done for tax evasion and to hide your assets purposes. So gonna be some more disclosures. I think some of it might even be able to move the markets around just a little bit when we get some surprises out of that. So we'll see. Anyway, guys, ran some numbers this morning. First off, there's just almost no value to be found anywhere in the broader market. The lists are shrinking every week. I sat up last night watching that marathon Orioles game with the rain delays. We won, by the way, opening day. Walk-off hit in the ninth by Matt Wieters. What a great way to start the season. But just running numbers. And when you look for safe and cheap stocks, you're just not turning up a lot. What we find, we already own. So there's not any new inventory being created. We got a couple little bumps back there in January. Nothing like that since, as markets have just decided January was a fluke and continued to move up in the direction of all-time highs. So it's not a great time to be pouring a lot of money in the broad market. Here is the good news. Community banks are still it. Ran some screens this morning, found about 250 community banks, all trading below book value with strong balance sheets and solid loan portfolios. We had about an average price to book of 80%. And by the way, the smaller you went down the market cap, of course, the bigger the discounts. The money to be made here is in the smaller, less liquid community bank stocks. That's where the big money, I think, is sitting. But we had less than 2% non-performing assets on average on this list of 250 potential buy candidates, and most of them were well capitalized, as we had an equity to assets ratio that was actually over 10, a little bit above the industry average. Of that number, of the 250, about 120 had institutional investors involved in their shares, most of which are bank stock specialists or activists. So there's a little bit of an edge there, investing in stocks where you at least have an institutional presence. Somebody is aware of how cheap the stock is. They've been buying it. Some of them are activists who are going to pressure management to take some steps, buybacks, increase dividends, maybe even the sale of the bank to get the stock price higher over time. So the big opportunity in this market for us as individual investors remains the small community banks. Now, most of you guys are going to do nothing with that information. The fact that these things are illiquid and it can take a while to buy or sell. Just talked to a guy today who bought one of my favorite little banks up in the great state of Tennessee. And it took him a couple of months of patiently sitting to get a position in this bank. But this bank is at 75% of book value with a pristine balance sheet, a wonderful loan portfolio, and it's in a market that's actually been seeing some consolidation activity. And there's a lot of people that want to be in this particular market. So, the potential returns here from 75% of book value are enormous. Think if this thing gets taken out at the current average of 1.35 or even 1.2 times book value. Huge rates of return in these small bank stocks right now. We've been just very patiently sitting the bid on our favorites. It's a little bit of a sloppy market right now, some turmoil. Financials have been weak, and Wall Street's very much a throw the baby out with the bathwater. So some dummies have been selling some of these solid community banks, and they've been just hitting the bid. So we've picked up some positions in some at very attractive prices, and that's the strategy for right now. As long as the financials remain weak and a little bit sloppy, just kind of sit the bid on these things and collect them as they come in. Not a lot of opportunity in the broad market. Huge opportunities. Sound like Donald Trump there. Doing a huge opportunity in the small community bank stocks. Like I said, they're not liquid. They're not easy to trade, but they can make you a lot of money over time. We've referred to the Ibbotson study on liquidity before. I'll do it again. Small value stocks in his study, which covered like 1972 to 2012, I believe. I'll have to go back and check, but that's the approximate range the study covered. Small value stocks like community banks earned 18.2% a year. The illiquid value stocks, let me put a qualifier on that because he did this specifically based on liquidity. So illiquid value stocks, 18.2% a year on average. Large liquid growth stocks, that's where everybody is. Apple, Google, Facebook, all the stocks as a group, about 2% a year, ran behind inflation, well behind the market over this tremendously long period of time. Everybody's in the large liquid growth stuff. Have fun. All the profits seem to be down in the illiquid, smaller stuff. So that's where we'll be, especially in the community bank stocks. So anyway, don't usually do this, but tonight we're going to throw out a couple of special situation stocks. Written about them a lot lately. They're not classic value stocks. They don't show up in the deep value portfolio. They do show up, however, in my wife's Don't You Dare Lose My Money Because I Can Kill You in Your Sleep portfolio. So the first one is Daktronics, D-A-K-T, and I love everything about this little company. They're in a fantastic, although lumpy, business. They make electric signage, billboards, scoreboards for just about all sizes. In the sports market, they've got everything from scoreboards for your local rec league and high school all the way up to Wrigley Field. They're in a bunch of the NFL stadiums. They make the scoreboards. They make the lighted tickers that go around the stadium. Just about everything to do that has to do with electronic lighting inside that stadium is Daktronics, and they're a world leader in this particular market. They're also very active in billboards, and they just bought a company called AdFlow that's going to increase their exposure to the digital sign markets. And you see digital signs everywhere now: auto dealers, bars, restaurants, churches, you name it. Everybody's going towards digital signs. This is a huge growth market, and it's one that you don't think about because who really thinks about billboards and sports stadiums and lights and It's there, it's huge, it's going to grow. It's a very lumpy business because particularly the large sports stadium contracts, well, they don't come along every year. They come along every few years. This is a fantastic company. I think you can stick this thing in a drawer, come back and look at it in a decade, and you're going to be shocked by how much money you've made. The only thing that I can see stopping this stock from being a long-term private equity time frame type of winner is if somebody else comes along and buys them before it can happen. They are the leader in what's going to be an explosive market. So not a classic growth stock, but you look at this thing, next year earnings are estimated to be up 120% from this year. They're looking at 20% a year on average 5-year growth over the next 5 years. And this thing pays a 5% dividend. So you're getting very generously paid while you wait for the growth to occur. It's actually one of my favorite small long-term special opportunity stocks, and again, like $7.70 tonight, symbol DAKT, Daktronics. So we don't do special situations in the deep value letter, but we do run across these things. Actually stole this idea from one of the smartest value investors that I know. Just kind of came up in conversation. He mentioned it to me. The more I dug into it, the more excited I got about the future of this particular company. So next one, I've talked about this a lot. It's not in the deep value portfolio because it does not at this time currently reflect any of our usual valuation parameters. But unfortunate truth, the growth industry of humanity is war. Always has been, always will be, will always be with us. There's just something about human beings. we like to fight. I'm not quite sure why that is. We're very nationalistic, very territorial, and some folks just want more than is theirs. And when that happens, there's going to be armed conflict. Kratos Defense and Security Systems, KTOS, is involved in all of what I call the new faces of warfare. They have a division that is actively working on drone technology and other unmanned surveillance systems. They're very active in command and control systems. They have infrastructure protection, particularly for Homeland Security. That's your electric grid protection, your airports, other transportation terminals, marine terminals, providing protection and surveillance systems for these installations. They're also in security and surveillance systems. All the key markets where there's going to be strong activity going forward. Cybersecurity and cyber warfare is the warfare of the future for all intents and purposes. They're very active in that market. So again, looking at this company, the number of Department of Defense contracts they've been winning over the last couple of years, I look out, I put my little private equity hat on, and I say, okay, we're going to look at this for 10 years. The only thing that stops this company from being a huge long-term winner is if another defense contractor comes along and says, boy, this little company's got a lot of nice little divisions. We can buy this, maybe keep the drones and the cybersecurity and sell the Homeland Security to these folks over here, and we've got a sum of the parts deal that just really works out well for us. That's a possibility at some point. I'd rather own it for the next decade and let it pay for my island house down in the Keys that we are planning as soon as the little one goes off to college. I'm telling you, that moving van taking her to school is going left. We are going right and south, right out of the driveway down to our favorite spot in the Keys and retire there. I'll probably keep working, but the wife will want to retire and putter around doing island stuff. So two great stocks. Don't buy them for a pop. Don't buy them for a trade. Buy them, order out the stock certificates and stick them in your safe deposit box. These are long-term special situation stocks that are both in growth industries. I think that Daktronics probably faster growth because I think that's an accelerating market. Kratos, unfortunately, sees very steady growth because armed conflict, and especially I think now cybersecurity and drones, just part of the world that we live in. It's going to be unfortunately a big business, but we can make some money off it as long-term investors. So buy it, take that 10-year time frame, and I think you're just going to make a ton of money on these two stocks. Don't usually give out some stock picks on this particular video presentation. Since they're not classic value stocks, we thought we'd throw a couple out there that can help you make some money as a long-term private equity mindset investor this week. But remember, your major focus should be on those community banks. If you are not a subscriber to Banking on Profits Monthly or Banking on Profits, you absolutely should be. And I'll put a link in, once again, in the description of this week's video so that you can sign up and get both or one of the Banking on Profits newsletters. Okay, so now, a lot going on this week. Major League Baseball has started. Going to be a big night around here tonight. Now, I'm a political junkie, so we're going to be watching the Wisconsin returns, seeing just exactly which one of the polls were right. Some said Ted Cruz was winning. Some said Donald Trump was winning. None said John Kasich was winning. But Sanders looks to be giving Hillary Clinton another strong fight in the state of Wisconsin. If he wins tonight, the pledged delegate race is actually going to be very close. The only thing that's giving Hillary a commanding lead right now is, in fact, the superdelegates. And a lot of people are looking at that and wondering just exactly how it is that these already elected officials have so much say over who the party's candidate is, because they are enough to change the face of any primary election in the Democratic Party. Interesting, that's on top of the GOP leader comments a couple weeks ago that said the people don't elect the candidate, we do. So I think people are starting to question political parties and maybe coming around a little bit to Sam Adams and George Washington's point of view that the worst cancer on Republican democracy is in fact political parties that put dogma over values. That's really what we have in this country today. But anyway, I'll be watching that closely tonight. But we've also got the Orioles are not playing, so we'll probably watch the Rays and the Blue Jays. That should be a pretty good ball game. Blue Jays have won the first two, 5-3 both times. I do think in the long run the Rays overtake the Blue Jays this year because four young pitchers with ERAs under 4 is just going to be tough. They're going to be in just about every game. And of course, later tonight we have the Cubs and the Angels, which means you get to see one of the best young teams in baseball playing against the best young player in baseball in Mike Trout. Caught a little bit of the game last night. It was pretty exciting to watch. So lots of new books out. I've loaded my Kindle up. Marcia Clark, the O.J. Simpson prosecutor, has a new fiction novel out based on, I hope it's going to be a series based on a young attorney in L.A. Quite good so far. Also reading Misbehaving, which of course is Richard Thaler's new behavioral finance book. So far, so good. It's an excellent book. I've read everything he's ever written. So should you, especially on the subject of finance. The guy has it kind of wired when it comes to how and why investors do certain things that end up costing them money over time. About a third of the way into the book, very good. Lots of commentaries, comments, and examples. He's pretty easy to read for as guy as smart as he is. Usually guys as smart can be tough to read. But then Jeff Graham's collection of activist letters over the years called Dear Chairman is just an absolute delight to read. Been having a lot of fun with that book, about halfway through, and cannot recommend it enough. So get both of those on your business reading buy list right away. Anyway, that's about all I've got down here this week. Been home all day, last 2 days actually, with a sick, newly minted teenager, which is nowhere near as much fun as it sounds. Fortunately, she's finally going back to school tomorrow. We'll have a little peace and quiet around this place again, and we're looking forward to the rest of the week. Remember, not a lot of values in the broad market. Two great special situations to buy, hold for an extended period of time, and your focus really needs to be on two major asset classes. One is cash. You should be building cash, even though there's no return on it. There's no return on a hammer either, but it's an incredible, useful tool when you need to pound a nail. Eventually, this market's going to experience a viable pullback, and cash will be the most valuable tool that you have available to you. And the other one, community banks. Over 250 bank stocks, trading below book value with great balance sheets, active institutional investor involvement, and strong loan portfolios. That's a recipe for success. So make sure that you're involved in the trade of the decade in community bank stocks. Anyway, this is Tim Melvin from down here in Central Florida, and hopefully I'll talk to you guys next week unless something else goes crazy wrong around the house. And we should have all the systems, audio and video, upgraded sometime over the next week or two. Until then, I'll talk to you next week.